The following is a presentation of TFNN.
Let's go to our first call of the day. We'll talk to John in Austin, Texas. How you doing today, John?
Way too good, Ken. Appreciate what you're doing. You do such a great job. This show is fantastic every day.
You're a good man, John. Really appreciate it. Thank you.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. Welcome to another edition of Breakout Investing. Happy Hump Day, Wednesday, March 13th, 877-927-6648. Give me a call. Let's talk about this resilient market holding near highs. You can catch my show every day on TFNN from 3 to 4 Eastern. The show is also available as a podcast on iTunes. If you can't listen live, head over to iTunes and get the podcast. And don't forget, you can listen to all TFNN programming on your smartphone. All you have to do is open your smartphone browser, type in tfnn.mobi, and you can listen to the stream. And then Tiger TV on the homepage of tfnn.com. Cool feature. Channel 1, the show is carried live. It is archived on Channel 13. And with Tiger TV, not only do you get the show audio, but you can look at charts live right along with me. So start by taking a look at the NASDAQ composite, resilient as ever, holding near highs here, up about 4.5 points today to 3247. Volume tracking lighter than what we saw Tuesday, about 10% lighter. NASDAQ volume on Tuesday was 1.63 billion shares. S&P 500. See, it is holding near highs as well, up slightly less than 1 point to 1553. Volume on the New York Stock Exchange tracking a little bit lighter than Tuesday as well, about 5% lighter at this point. Tuesday, we saw 618 million shares trade on the New York Stock Exchange. S&P 500 at 1553. Its intraday high set back in, what was that, October 2007 was 1576. So it is about 23 points away from that all-time high. A lot of people thinking that S&P 500 will eventually be able to get over that price level. But what we have right now in the market, and I think it's something that's, we've been mentioning it on the show this week, and that is that we're in an uptrend. That's a good thing. It's not a market that is under distribution. That's also a good thing. So if you've got stocks in your portfolio, most likely they are all working to some degree. Maybe some are highly profitable. Maybe some are just okay profitable. Maybe some are profitable, but weren't doing what you expected. Either way, the trend is flowing positive. So, there's no reason to get too bearish here. But with if you have new money to put to work, that's when it gets a little tricky, because you see a lot of the big movers in the market today. We're going to talk about J.B. Hunt Transport Services, the trucking firm. Big gap up for that stock back in early January, and it's just up big again today. But it is so far extended past a proper entry point, and situations like that are abundant in the market right now. So many extended stocks out there that it is difficult to put new money to work. And then, these technical breakouts that we've been seeing in recent days, Everbank Financial, EVER, had a beautiful breakout. Let's pull up a daily chart for Everbank Financial. They're actually the title sponsor of the PGA event down in, I believe it's in Florida. This weekend, Thursday, Friday, Saturday, Sunday. But Everbank having a good day today, basically pulled back to its 50-day moving average. But in a market uptrend, in a healthy market uptrend, the breakout that Everbank experienced, to see the price action post breakout is very disconcerting, because strong breakouts should at the very least be able to hold on to their gains during market uptrends. They should not reverse in dramatic fashion. So, and this is a high quality company, good fundamentals, and support so far at the 50-day moving average for Everbank, but very questionable action. I mean, the breakout situation right now is kind of mixed at best. You've got a lot of extended stocks, and then some breakouts working, some aren't, but very few stocks that are still in consolidation areas that are trying to break out. Again, most of that action took place on January 2nd when the NASDAQ gapped up in price. And since we were talking about JB Hunt, let's just take a look at JB Hunt, because this is a big gainer. Big gainer today. Nice volume, huge move up 5.7% to 74.12. But the buy point here was the base. Here was the consolidation area. Okay, basically between November through December for about 2 months, and then a gap up in price. And I can tell you a lot of people were afraid to buy JB Hunt when it gapped up over $60 a share on January 2nd. But if you had bought that at 60, you're looking at a $74 stock right now. So plenty of instances where buying a gap up is not necessarily a bad idea, and it worked for JB Hunt. So couldn't find any news for the stock today, but yeah, just a stock that's very extended up here. And if you're buying up here, you'd be chasing, and chasing is a pretty risky strategy. Yesterday in the market, we did get a distribution day. It was mild distribution. It was not heavy distribution at all, but we did get distribution in the NASDAQ Composite and the S&P 500 yesterday. But still, distribution, higher volume declines, signs of institutional selling, virtually non-existent in the market. So it's too early to put on the bear camp here, the bear cap here. But again, I'm just a little wary of all the extended stocks out there. And during market uptrends, there are going to be times when the market is going to be serving up buy candidates on a silver platter. You're going to see them everywhere. And frankly, that was the case back on January 2nd. And then there are going to be times when the market's still in an uptrend, is still acting well, but the crop of buy candidates is going to get much, much smaller, and that is where we are at right now. So one distribution day for the NASDAQ Composite, 2 for the S&P 500, although one of those days was a day of stalling action where volume expanded, but the S&P 500 closed near its low, or at least in the bottom half of its range, so it showed a little churning action. So we did get retail sales data today. A lot of concerns about what the payroll tax increase was going to mean for this month's data, but not much of an effect, it looks like, because February retail sales earlier today overall were up 1.1%. The estimate was for a 0.5% gain, so it was more than double expectations. Excluding autos, up 1%. That was also double expectations. So the strong retail sales fueled another rally in the dollar. The U.S. dollar index recently trading around 82.86, up 0.3%. We'll see where the U.S. dollar index closed yesterday. Let's see if this is going to work for me. Doesn't look like it. Just see. Here we go. All right, U.S. dollar index yesterday closed at 82.58. So today trading at, like I said, 82.86, up about 0.3%, and it has been a monster move for the greenback, basically since February. Market holding up pretty well in light of the strong dollar. Also heard the Business Roundtable Index. I heard this on CNBC earlier today. I normally don't pay a whole lot of attention to it, but there was some interesting information that came from it. First of all, the Business Roundtable Index came in at 81 from 55.6. Shows that CEOs are getting more confident about the economy. The survey of CEOs expects 2.1% economic growth in 2013, pretty much in line with what the Fed is looking for. CEO said that higher sales and capital spending will boost the economy and help growth. But unfortunately, the CEO said there are still no plans to hire. And that is going to be the big wild card. What is the jobs picture going to look like in the second quarter, in the third quarter, in the fourth quarter of 2013? We keep getting these drops in the unemployment rate, but it's not because more people are, finding jobs. It's because the participation rate is headed lower. So people are just they've stopped looking for work, and that is what's causing the unemployment rate to fall. So still an uncertain jobs picture out there. Tomorrow we're going to get weekly jobless claims and also the latest reading on wholesale inflation. Overall, producer prices should be up 0.6% in February, with the core rate up 0.2%. On Friday, the consumer price index will be out. The latest reading from the University of Michigan, first reading for the month of March, actually, and then also the Empire Manufacturing Index, that is also due Friday. Taking a look at April gold. April gold lost $3.30, settles at $1,588.40 an ounce. Taking a look at the GLD, Spider Gold Trust, right now down 40 cents to 153.79. No signs yet that the GLD is going to be ready to start an uptrend anytime soon here. Still flailing around, trying to find a bottom and stuck underneath some key resistance levels here, 158, 161, but the GLD right now trading at 153.79. And April crude oil, $92.52 a barrel, ends a modest winning streak for oil, down 2 cents on the day. We did get inventory data from the EIA, that's the Energy Information Administration. They said crude supplies last week rose 2.6 million barrels. That was a little more than expected. Gasoline supplies fell by 3.6 million barrels, more than double expectations. Distillate stockpiles unexpectedly rose by 100,000 barrels. Oil refiners under pressure today. They've been big market leaders. Macquarie Research came out with a note. They downgraded Holly Frontier, CVR Energy. We heard from CVR yesterday they reported earnings, and also Valero Energy. All three were downgraded. Let's take a look at HFC, Holly Frontier. Last check, they were trading, now it's back near session lows. Holly Frontier down 4.9% to 52.25, still holding above its 50-day moving average. You can see right there. And CVI Energy getting hit pretty hard, down 7.9% in huge volume. Last trading at 54.84, but still holding above its 50-day moving average. And Valero Energy, VLO, also holding above its 50-day line, but down almost 5% to 43.43. The note from Macquarie basically said that prices for renewable fuel credits have skyrocketed and could hurt earnings going forward at the oil refiners. So that is the deal there. Not much movement in bond yields today. The 10-year note pretty much unchanged from yesterday, 2.02%. 30-year bond, also not much movement, right where it was yesterday, 3.22%. Check in on shares of Boeing here. Boeing has been an incredible performer in the market. You had a beautiful breakout for Boeing a few weeks back. Nice breakout over $78 a share. Last trading at $84.30, up 14 cents on the day. A little bit extended up here, but the company did get approval from the FAA to start testing redesigned batteries for the 787 Dreamliner. That Dreamliner could be back in the air by mid to late April. So we'll see what happens with Boeing. We'll be right back, folks.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
you take a hands-on approach to managing your investments. And whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone. Checking in on the markets here. Dow up a little more than 1 point now to 14,451. NASDAQ Composite off its high as well, up slightly more than a point, a little more than a point and a half to 3244, and the S&P 500 up slightly more than 1 point to 1554. Just tuning into CNBC here, seeing that they have elected a new Pope. Good news there. He is speaking at the Vatican currently. But let's settle back into the markets here and talk about an interesting IPO that started trading today, Silver Spring Networks. Now, my charting service here is going to look a little funny when this chart comes up, but Silver Spring Networks, they priced 4.75 million shares last night at 17, pretty much at the midpoint of the 16 to 18 range. Big day for the stock, up about 26% to 2141. Silver Spring Networks provides smart grid products and services to utilities, which continue to do pretty well in the market here. So Silver Spring Networks having a good day in its debut. I was over at my favorite IPO site, IPOhome.com, and they had some interesting data saying that 23 IPOs have priced so far this year, down 8% from a year ago. But total proceeds raised are now $5.9 billion, which is up 132% from a year ago. The average IPO this year has returned an average of 16.7% from its offer price. So there's some IPO data for you. Let's take a look at shares of Netflix. This is another, market leader here that is just absolutely not doing anything wrong. So, it's definitely something to like about this market. Doesn't mean that the stock is buyable up here, because Netflix is still basing, still consolidating gains, but when a stock starts to move sideways after recent price strength, you definitely want to pay attention to that. But it's only been consolidating gains for about 3.5 weeks. Typically, a base is going to take at least 4 to 5 weeks to form. You've got resistance at just under 200 for Netflix. 197.62 would be its recent high, but the stock is up about $10 today to 192.20. And the story for Netflix, Reed Hastings is on the board of Facebook, and today Netflix unveiled a new feature that will let subscribers basically let Facebook friends. The Netflix account can be linked up to Facebook, so friends can know what kind of TV shows you're watching, and Netflix subscribers can also see their friends' viewing activity as well. So not necessarily a money maker for Netflix, but the stock is up 5.5% today to 192.20. Stock acting very, very well. Technically strong. Fundamentals look very solid as well here. VMware had its investor conference today, investor meeting today, and the stock is making a very nice move, up 8.1% to 81.37. You can see it just made a move right up to its 50-day moving average here. The 50-day moving average is at 82.74. VMware hit a high of 82.82, so it hasn't quite been able to get over this resistance level. But strong day for VMware at an investor meeting today. The enterprise software firm said it expects annual revenue to grow between 15 and 20% from 2014 to 2016. So investors took that to mean good news. Take a look at shares of Google here. Another story stock today. Google has been under pressure for about the past 5-6 trading sessions, but still holding near highs here. In fact, let's take a look at a chart of Google with the 10-day, 20-day, and 50-day moving average. You see that Google right now is just kind of hugging its 10-day moving average, trading at right now 824.65. It's only down about 0.4% on the day. Late Tuesday, news came out the company's going to pay a $7 million fine, kind of peanuts and pocket change for Google, but they're going to pay a fine for collecting personal data from unsecured wireless networks in the U.S. between 2008 and 2010. Separately, other news at Google, Andy Rubin, who is sort of the big, the spearheaded basically the development of Google's Android operating system. He's moving on to another role in the company. So Google could be ready to consolidate here, but not showing any signs it's ready to break down yet. So another large cap tech name acting pretty darn good in this market. Coming up on break number 2, folks, stick with me. Breakout Investing on TFNN. We'll be right back.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. Let's head to the East Coast. Talk to Steve from Nashua, New Hampshire. How you doing, Steve?
Ken, how are you? You keeping out, watching out for those sinkholes on the golf course? You heard that one, right?
Yeah, I did, actually. Yeah, I did. That's pretty... I don't know what it is with all these sinkholes. I mean, they're all over the place. Golf courses. I think there was one down in Florida that... yikes.
Yeah, crazy.
The last time I talked to you, Steve, you were digging out of some snow, if memory serves.
Yeah, I was. It's a beautiful sunny day today, though. I think I'm fingers crossed that we have the last of it here.
Good deal.
But, we'll see. I've been looking at this. I'm not in it. The DDD, David, which is that 3D Systems.
Yeah.
The printer stock. And
yes.
I'm on a 2-year, both a weekly and a monthly, but right now I'm looking at a weekly. And it had this big flurry of volume most recently in the last month or so. But I'm looking at the stochastics, which seems to be at a low point. But when I flip over to the 2-year monthly, is really what my question centers on. 2-year monthly, it looks like from, where is it there? September of 12, September of 12, it was around $10. Up until
Yeah, let's see. Late September 2012. I see it hit a low
11.
of about. Say it again. Oh, 11.
Yeah, I think it's
Got
11. Yeah, $10, $9.
Yeah. Gotcha.
Up to the peak there in January, I think was 47 or so.
Right.
That volume on a monthly, it looks like the volume was increasing every time, like it's almost an A to B. I don't know if that's true, but any feel for this thing?
Well, I mean, when I look at the daily, listen, volume is starting to dry up. The stock went through a pretty intense distribution phase, and I'm looking at a daily right now on Tiger TV. But basically, between, from late January until late February, basically a 1 month period there was a lot of distribution in the stock, and frankly it is still a stock under distribution, but what you're seeing over the past week or so, maybe even past 2 weeks, is that selling volume really is starting to dry up, and it's starting to dry up still above the 200-day moving average. So I'm sure there are some people out there that are gonna maybe try to nibble at a little bit right here, thinking they're at a pretty low risk entry point. And I would say that even though this is not my style of investing, and I tend to look at stocks showing relative price strength, but I know several technician friends that would say that the volume dry up down here and the fact that it's been able to hold on to support above the 200-day line is probably giving you a risk reward is probably not too bad right here. So
right,
that would be.
I'm sorry.
No, I was just saying that's my general take, with the caveat that this is not really my area of expertise, buying stocks that are under distribution like this.
Sure, I was thinking worst case February 23rd or so, right around there when it had that low that dropped down low one day to $30.10.
Yeah, just above 30.28. It hit a low on February 25th. Yeah, exactly. Exactly. So you're seeing it kind of come into that low and testing it in light volume, and you probably listened to Tom, and you want to see those lows tested in light volume. Right. And so far, that looks to be the case. So 3D Systems could be an opportunity here. There's that other name we've been talking about on the show, Proto Labs. They don't make the 3D. They don't the 3D printers, but they provide 3D printing as a service. And I'm looking at a daily chart for PRLB. It's a much different looking chart than 3D Systems, because PRLB is still a stock to me that looks like it's under a little bit of accumulation here, and it did come down and fill its gap recently and has started to work its way higher. So in the 3D printing space, this is another pretty decent stock. It's on the speculative side, market cap of 1.2 billion, but they had a really solid quarter when they announced. That was when the stock gapped up on in mid-February. So it's another 3D name here that I think has got pretty good potential.
Well, great. That's something to look at. I will look at that, and I appreciate your information.
Okay. Thanks for the call.
Great.
As always, have a great one. All right.
You too. Bye.
Okay, 3D printing still interest out there. You've got 3D Systems and Stratasys that have been under a lot of selling pressure. Trying to put in a bottom here. Proto Labs, though, definitely an interesting name in the space. Market cap of 1.2 billion. Average daily volume of 425,000 shares. Still, could still be in the fairly early stages of growth here. This is a company that came public last year in February, so it's been public for a little over a year. But earnings growth accelerating in recent quarters. They had a nice acceleration in sales growth when they reported fourth quarter earnings again back in mid-February. So Proto Labs is in the 3D space, probably my favorite right now. So let's see, where were we talking about? Google, other story stocks here. I mentioned that Oracle next week is going to be reporting earnings, and the stock got an upgrade today to buy from hold at Canaccord Genuity. And nice little technical setup here for Oracle. Playing bullish technical setups ahead of earnings is very risky. Sometimes stocks that look like they should that are acting like they want to break out and move higher, if earnings are right around the corner, sometimes that it does not happen. You can see breakdowns pretty easily. But Oracle has a nice looking chart right now, no question about it. Recently moved back above its 50-day moving average. It has been drifting lower over the past 3 or 4 days, but the stock on the upgrade again from Canaccord Genuity, up about 21 cents, 0.6% to 35.64. So Oracle not looking too bad ahead of earnings, and hey, why not check on Apple here? Apple has, well, let's see here. It's kind of all over the place. Last I saw, Apple was up $3 or $4. Now it is mostly unchanged on the day. Actually down 12 cents to $428.31, a stock that just cannot get out of its own way. The news here is that Samsung is going to be coming out with that Galaxy S4 tomorrow in New York. Expected screen size of 5 inches, much bigger than what the iPhone offers now. And the Samsung Galaxy S4 is also expected to have a full HD 1080 by 1920 display. Like I said, gorgeous phone. More and more people that I'm in contact with seem to have these Samsung phones, and I'm hearing anecdotally people, turning in their iPhones, checking out these Samsungs, and it is a nice phone. Operates, of course, on the Android operating system, so sure there'll be a lot of buzz tomorrow when Samsung introduces the new Galaxy S4. When it comes to Apple, well, we've been pretty clear about Apple since we got rid of the stock in late September, early October for the Ultimate Growth Stocks model portfolio. I think we were out of it entirely at around 675 thereabouts, but this is just a lot of noise about why Apple's going down. It's just a story of slowing growth ahead, and mutual fund managers not nearly as interested in owning the stock as they were when Apple was sort of in the heyday of its growth. Certainly challenging times ahead for Apple. Taking a look at some other interesting stocks today on the move. Western Digital. We'll start by looking at a daily first. Nice technical setup here, working on 4 straight days of gains. You can see actually a little breakout here, but this is just a classic low volume breakout. Just can't get interested in low volume breakouts at the crux of technical analysis and buying breakouts. You want to see a stock under meaningful accumulation when it is clearing resistance. In Western Digital's case, 49.50 is the swing point here, so it's still within buying range. 50.29, that's not very extended, with the swing point is 49.50, but we'll take a look at a weekly chart here. My computer's just kind of funky today. Let's see here. Western Digital, there it is. Weekly chart for Western Digital, a little kind of what we call a high handle forming here, or support at the 10-week moving average. Either way, but it's still a breakout over resistance at 49.50. But you can see weekly volume so far this week just not there. So this is a breakout that I would just handle with caution. Shares of Regeneron, REGN, were bouncing back at one point today. It's doing okay, kind of in the bottom half of its range here again, up 67 cents today to 172.86. This one's been under a lot of selling pressure. It hit a high of 185, 190 back in November, December. Corrected down to about 155, has been working its way back. It's it's been a nice rally for the stock, but again, a stock that is just showing nothing in the way of accumulation here. So good rally for Regeneron. It hit that low of 154.16 in February. Right here, but all of its price gains since then have been in average or below average volume. That points to lack of conviction behind the buying, so it's not like its technical picture has strengthened that much just because of the lack of volume. So be careful buying Regeneron here. And let's take a look at United Rentals. It's a name we've talked about a fair amount on the show. URI is the ticker here. They provide construction industrial equipment rentals. Like the technical setup here very much, but it is too short a base. It's only been consolidating gains for about 3.5 weeks. It's not far from its recent high of 56.87, but this is too short a base. I hate to be too picky here, because if you're too picky, sometimes you can miss out on opportunities. But the bottom line is you really want to make sure bases form over an adequate amount of time. Okay, so this is it's been a big move for URI since the summer of 2012. Basically, is when it started moving, and it's still holding above its 10-week moving average. But again, a 3.5-week consolidation after the breakout right here. I suppose you could look at it as support at the 10-week moving average for the first time after the breakout week right here. So not bad. One of the better names out there that still could be in a buying range. Talked about JB Hunt Transport Services, JBHT, very extended stock, a stock that gapped up on January 2nd. Let's just go ahead and take another look at that one real quick. JB Hunt was a great buy back right here, January 2nd, breakout over $60 a share, but it keeps getting more extended here. Stock's up 5.5% today to $73.92. Be careful not to chase it. But another stock today that got an upgrade, also ironically gapped up on January 2nd. Affiliated Managers Group. This is an investment management group. Got an upgrade by Goldman Sachs to buy today with a $170 price target. And another stock here was the gap up on January 2nd. Again, a lot of people probably didn't buy there, but imagine getting this stock at 133, 134. It's now at 154.42, and we'll just look at the weekly chart. Oh, I don't have a weekly chart. No weekly chart for affiliate. That's okay. But a little late to buy right now. But the stock is up 2.9% to 154.42. So that is an investment manager. And then another stock in the group. Let's check in on WDR. I do think I have a weekly chart for Waddell and Reed. Kind of a similar looking move here. Big move since January. Gap up for this stock January 2nd when it broke out over 35, 36 thereabouts. Now trading at 43.08, up 1.6% on the day. Let's take a look at the weekly for Waddell and Reed. Let's see here. There it is. And you can see just nice little support at the 10-week moving average here, and another stock that looks pretty interesting here. Saw very heavy volume today in Icon, ICON. This is Iconic's brand group. Some of its more well-known brands include Candies. In fact, that used to be the company name, Candies. They also own London Fog, Massimo, Rampage, and Ocean Pacific. Swing point of 24.92 here. It hasn't technically broken out yet, but it is enjoying a nice bounce off its 50-day moving average. Earlier today, the company announced a pricing of $350 million in convertible notes. So obviously a lot of interest in the stock today. Very, very big volume. And again, the swing point in play here is 24.92. That would be its high set back in February right here. Example of a great chart and lukewarm fundamentals. Key part of my strategy, I like bullish stock charts, stock showing relative price strength, but fundamentals have to be there too. They're missing at Iconics despite a good technical picture. So caveat emptor. Headed into the final break, folks. We'll check in on the markets one more time when we come back. Stick with me. Breakout Investing. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just 1 position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone, to Breakout Investing on TFNN. Quick check on the markets. 5 minutes left to go in Wednesday's session. Dow up almost 15 points to 14,465. NASDAQ Composite up close to 4 points to 3246. S&P 500, 1555, up close to 3 points. Boy, the airlines just keep on humming here. Very, very impressive performance by the group. Great area of leadership in the market, but stocks that are so extended, it's not even close. Just can't chase them up here. Spirit Airlines doing very well today, up 1.9% to 2406. That is ticker SAVE. Spirit Airlines, SAVE. You had a beautiful breakout for Spirit, over $20 a share. Here was the breakout, which was, February 19th. This was the breakout day. If you'd bought on that breakout, looking just dandy here. And what's interesting, I did save a weekly chart for Spirit Airlines. Let's go ahead and take a look at save here. That's SP. Here's the weekly chart for Spirit Airlines, and here was the breakout over 20. That's what that arrow is pointing to. But look at this big, long base that the stock is forming here. It started forming this big base back in May 2012, so it's right at the top of the base here. So even though it's a bit extended in price, what could happen here is you could see a little shakeout in light volume. That would be ideal. If you get a low volume shakeout here, that would pave the way, potentially for a nice breakout over that May 2012 high of 24.75.25. So in the airline space, definitely want to keep an eye on Spirit Airlines here. I wouldn't chase it right now after a huge weekly gain last week, more gains this week. At some point, you're going to get a pullback here, and if that pullback happens in light volume, then it's on breakout watch again. So Spirit Airlines looking very strong here. And let's also take a look at a weekly chart for ICLR, Icon PLC. This is a company that drug makers, they farm out their work to CROs like Icon. CRO stands for Contract Research Organization. They help the big pharmaceuticals help bring drugs to market. And I just love the way that Icon is holding gains here after a strong move in recent weeks. Last trading at 31.51. It's down 1% for the week right now, but holding nicely above that 10-week moving average and being very stubborn about giving back gains. Fundamentals very strong at Icon. Again, the ticker here is ICLR. They should be able to grow earnings in 2013 by 49% and another 20% in 2014. So they've been signing some kind of longer-term deals with big pharmaceuticals out there, which is really helping drive bottom line growth. In their latest reported quarter, fourth quarter sales were up 24%. That was a nice acceleration from 19% growth in the third quarter. Earnings up 386% from a year ago to 34 cents a share. So Icon PLC looking good here. And then in the tech space, we've been talking about Commvault CVLT. This is a stock that is just flat out behaving itself. A lot of tech names under pressure. We'll check in on eBay in just a second, but Commvault looking very strong here, holding near highs and just showing relative price strength. Nice looking chart. And I'll tell you what, shares of eBay getting crushed again today. We got rid of this stock a while back for the model portfolio for a modest profit. eBay remains under pressure. Coming up next, the Tom O'Brien Show. I'll be back tomorrow, folks, 3 o'clock Eastern for another edition of Breakout Investing. Hope you have a great rest of the day. See ya.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.